Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, October 28, 2024. We are looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, we'll start things out with she's eating time off the clock above the 20 and all the moving averages for that matter, but above the 20-period moving average. The trend is your friend. We had a gap higher open this morning, and then we had a bit of a halfway crap out situation, and the market was basically quiet-ish, SH in italics, for the most of the day. Here's the hourly chart. You have a little gap higher open, and then she kind of drifted and rode the 50-period moving average on this hourly chart. When you look at a 2-hour chart, there's a convergence of moving averages. Just didn't really get very far. We are absolutely in the heart of earnings season. We have a plethora of earnings happening this week. We have a lot of the big tech names reporting this week. I believe Google reports tomorrow, Tuesday, after the close most likely. Bunch of other stuff on the board. Since we have a new week on our hands, let's take a look at the weekly chart. Was there any material change last week to this week, or the week before to last week? And the answer is no. She was basically eating time off the clock, letting the 20-period moving average, or home base, as we like to call it, creep up toward price. Going sideways or eating time off the clock is, in fact, a corrective move. It wouldn't take much this week at all with the laundry list of earnings reports due out. It wouldn't take much to get another new high out of the market this week. We are the umpire calling balls and strikes. That one's easy to see in an uptrend when you're already around new highs. But what happens if we get a little bit of a rug tug event, a rug pull event? What happens in terms of the support number? What would we be looking at from a support perspective? Well, let's say she gets below the 20-period moving average and would also have to make a new low. We're looking at a spike below of 572, let's just say 571.5, give or take, would be that target if she made a new low below the low. Write that down, put it on a sticky note. We'll call it a piece of temporary information. Other than new lows or new highs, there's not really much else to discuss in terms of the daily chart of the SPY. We can move it along for the time being. Here's a 5-minute chart. Right of the vertical black line is today's activity. I want to point something out for a moment. This is the table that's published each and every day for Inside the Number and Live Room members. I want you to take notice of a couple of things right now, and then you can take a gander at these numbers and then put some lines on your own chart and see what works and see how these can benefit you if you're interested in any of these markets during the trading day. But for now, we're going to focus on a couple of numbers, 581.30, 582.50, and then we'll also throw in a third number that shows up inside the numbers but not in this table after the market opens at 580.50, which they attempted here around midday, attempted it again after lunch, and attempted it again into the closing bell, but never got there. But you can see the first two numbers, 582.50, was in fact basically high of day. They collapsed right out of the opening bell. They opened right above it, went down to the next number, bounced right back to run a test. Look at the high in this candle, 582.49. The high in this candle, 582.50. There are no accidents or coincidences in the market, period, full stop. Can you benefit from these numbers each and every day? I do this work for each market that you saw below. The Qs, the IWM, SMH, TLT, GDX, oil, crude oil, gold, silver, natural gas, and there are others that we can do by request, if you will. We do have traders in the live room using these numbers each and every day. Now available for Inside the Number members across the board. Best deal in town, The price is going up if we keep inside the numbers this way with this table. After the month of October, I will make a determination. It is a lot of extra work on my part each and every day, but I am willing to do it if the demand is there, and the price will go up if we continue. I've said that a few times, and we'll see what happens at the end of the month, which is the end of the week. In addition to all these markets, we have stocks on the move, which nothing hit today. We had 4 on the board today. We're going to get a whole lot more tomorrow morning. Mondays are usually slow by nature. And we have some pre-market commentary, just setting up the day, setting up the week. And then we start in before the opening bell with what's the setup, where's the trade, what are the numbers that are important right here, right now. So what do we have today? Well, we start with the ongoing goose operation. They were goosing the market higher in a gap higher open scenario. Then we'll note the last 2 times she had a gap higher open, there was a crap out to follow. Wasn't a full-on crap out today, but certainly was not able to get any higher. It was, we'll call it a half a crap out. 582.50 will be our early extra bullish pivot place. So we're calling 582.50 our bull pivot. 582.50 is our bull pivot. They could not get any higher, but for a split second at the opening bell, ran one more test, and that was it for the day. And obviously, 581.30 was support, at least first time, best time, and even worked twice. Now, did we have traders short at the open based on these numbers? Yes. Where did they cover? How about between the minimum required base hit and 581.30? Did we have traders buy 581.30? Even though they started to take the luster off the trade over here by bouncing around a little bit, but nevertheless, the numbers did and do work. And where did they go back to? They went right back up to the pivot at 582.50. So traders that have a knowledge base of the numbers can A, affect entries, B, affect exits, and C, make money using the information. That's the point. Above 582.50, we have a leg higher. We didn't need that today. Staying below 582.50 keeps the door open back down to what? 581.30. On the board, 8:55 a.m. Eastern Standard Time, 35 minutes before the opening bell even rings. Pause the video. Read the notes, go back to the chart, and double check the work. You saw what happened today. That was pretty much the range of the day. We nailed the range of the day, but for adding up another number earlier after the open bell, but before we packed it in, and you could see it here at 11:03, below 581.30 on candle closes, opens the door down to 580.50. That was an in-betweener, or a tweener, as we say in the trading parlance. And then we leave you with the kind of, this is the way it works from here, giving all the necessary numbers if they should get more bullish or more bearish in the afternoon session. But this is a morning business, and if you're in the live room, you know exactly why I believe and feel this is a morning business, and therefore we keep it that way. Now, what's going on over in Camp IWM? So last week, for about 3 days, they're beginning to put in a bearish, flaggish situation underneath the 20-period moving average and so on. Now, today, they have relative strength up 1.63% or over $3.50 in the positive or green direction. They're comfortably above the 20-period moving average and all moving averages for that matter, and therefore the trend is your friend until your shit gets thrown out of the window. As long as she stays positive and above the 20-period moving average, what is the next target? Write this down, put it on a sticky note. It's going to be around, not the exact to the penny number, but a round, give or take, 225. Is anything wrong with the weekly chart? We had a down week, but they're above all the moving averages. So technically, no, nothing's wrong with the weekly chart whatsoever. As long as she stays below the high of this big-time breakdown candle, this is still a big-time breakdown candle, and this is a bearish wedgish pattern. However, above all the moving averages, the trend does take precedent over just about everything else. But what we do know about that information is if it's a capital I, capital F, if they were to close above the high of that breakdown candle, 228.63, the energy that would normally be released in the downward direction would be released in the upward direction, and you could with italics, could get one heck of a rally. We don't know whether she will or will not ever close above the high of that breakdown candle. This is information. It's awareness type stuff at present. And as you know, the IWM, or the Russell 2000 Index small cap space, is my favorite market leading indicator. And the number 2 favorite market leading indicator are the folks down at the transportation department. They are a number 1 canary in the coal mine. The IWM, or small cap space, was leading, had relative strength today. The transports, also relative strength, up over 1%. The SPDR was up about, or S&P was up about 1/3 of 1%. Transports had a nice day, up 185 or so points, over 1%, comfortably above all the moving averages. Trend is your friend until proven otherwise. Write that down, put it on a sticky note. What about the Q people? Is there anything wrong with the Qs? No, they're in an uptrend above all the moving averages. We had what you call a retracement of a tail candle and a gap and crap today, finishing near the low. So while the Qs were up 8 cents on the day, basically flat-ish, it's a rounding error, we're going to take heed in the look on this chart. A, above all the moving averages, trend is your friend, nothing wrong with the chart. Weekly trend, nothing wrong with this trend or chart either. But we will take heed in the fact that we had a tail candle after making a slight new high last week on Friday. They finished with a doji candle. So you have a tail candle, you have a doji candle, you have a retracement of the tail candle today. And by the way, this is all stuff, and this is just a snippet. This is all stuff taught in the course, Lazy E-mini Trader, which is, by the way, just the tip of the iceberg. But this could be a flare up in the air. This could be a sign and or signal of a trend change. Could, in italics, we are the umpire calling balls and strikes. The trend is your friend until it changes. They are in an uptrend, but that candle from Friday, the tail from Thursday, these two things with the new high, the tail from Friday and today's candle, these two things, we will note them. They are a potential puzzle piece. They're on the table. It could be a flare up in the air, a shot across the bow. The trend is your friend. That's the dominant thing, but we're watching the price action. What about the financial space? Nice healthy update for the financials today, up 1.25%. As you can see, they're above all the moving averages. The trend is your friend. You had a pretty decent down day on Friday, but didn't even touch the 20-period moving average. Is that a shot across the bow? Maybe. Right now, they're in an uptrend above all the moving averages. The trend is your friend. Big down day on Friday. A up day today above Friday's high, and it wipes off the reversal candle-ish looking thing, or the big down day, the breakdown candle from Friday above the high. 47.42 is that number. If you're an XLF long player, you're looking for closes above 47.42. Sticky note material. What about Smash Mouth, the Philadelphia Semiconductor Index space? So we've been eyeballing this thing for quite some time. This is canary-ish. The semi space is canary-ish for the tech space. And without the tech space, the overall market's not going anywhere. Tech's not going to be going down as the S&P and Dow are going to be going up, other than maybe a day here, a day there. But by and large, it's all the same market. And this is a canary-ish situation. Yes, above all the moving averages, trend is your friend. But this big down day that we've talked about since the day it happened, it was about a $14 down day. And now you're building a bearish, flaggish, wedgish, sloppy-ish kind of situation inside of that big-time breakdown candle. Yes, they're above all the moving averages, but I would take heed in that day, as I've been saying for a couple of weeks now. And if, capital I, capital F, if they start creeping below the moving averages, I would take heed in the SMH, and you're likely to see the Qs, the NASDAQ falling, and then everything is going to kind of start falling like dominoes if we see that start to develop. Big time signal as far as I'm concerned. Above the high of this breakdown candle, 262.11, no dice, that breaks the chain. That would be bullish, and the energy would be released in the upward direction. You go fill a gap up here around 275. Period. Full stop. Now, if I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.